In this video, I'll be going through Work Together problem 11-1 from page 324 of your Century 21 Accounting Textbook, edition 11, and this is the Advanced Accounting, okay? So we are journalizing dividend transactions. On April 1st of the current year, Western Tours Incorporated had 8,000 shares of 6% $100 par value preferred stock and 50,000 shares of $1 par value common stock outstanding. So journalize each transaction completed during the current year in your general journal and in your cash payments journal. Okay. April 1st, the board of directors declared a quarterly cash dividend of $25,000 payable on April 30th. Memorandum 32. So we will put April 1st here. And our account titles, we know we have dividends, and some of them are common, and we have dividends, and some of them are the preferred stock, and then we also have dividends payable will be our credit. Memorandum 32. So now we have to figure out what is the amount on this. So first we would figure out what is the total par value of the preferred stock. So we have 8,000 shares times $100 par value, and then times quarterly dividend. Didn't they say quarterly? Yes, quarterly. That's important because that means we'll divide it by 4. So times 6% or 0.06 divided by 4. So $12,000 for dividends preferred, which means obviously the other $13,000 is going to go to common, right? Because everything that's left will go to common stock. Preferred stock gets it first. And we know we were paying $25,000 dividend. Okay, so that's our April 1st entry. On April 30th, we paid the April 1st dividend. So that means we're down here because we paid it. We'll go to cash payments. We'll put dividends payable in the account title because we'll have a general debit of $25,000, which will make this credit go away, right? And this was check number 533. And this will just be a cash credit of the $25,000. All right, July 1st. An economic downturn made it impossible for Western Tours to declare its regular quarterly cash dividend. In lieu of a cash dividend, the board of directors declared a 5% stock dividend on common stock. The market price of the common stock on July 1st was $6.90. Okay, this one's going to be a little different. We will, on July 1st in our general journal, have a debit to stock dividends, right? And we'll have a credit to stock dividends distributable. And we'll have another one to paid in capital in excess of par value common. Okay, so that went over a little bit. It'll be all right. You could extend this if you wanted to. But then it's hard to see my notes over here. Okay, so we have to figure out just how much this was for. A 5% stock dividend on common stock. Okay? So the first thing that's important here is how many shares we have. We have 50,000 shares of common stock. So we'll take 50,000 shares. And we're doing a 5% stock dividend, so times 0.05. Okay, so the total number of shares to be issued is 2,500. So then I'm going to just take that in parentheses, so it's its own calculation first. And then we have to figure out how much total cost. That's the number of shares, right? So then the cost would be times $6.90. So $17,250, right? And theoretically, these could all be dollars. There we go. And that means the par value on that was $1 par value. So 2,500 shares at $1 par value is just going to be $2,500, right? And that was for your common stock. Now the rest of it, whatever goes to the paid in capital in excess of par value, will just be a subtraction. Right. So again, this 2,500, it's $1 times 2,500 shares we figured right here, the 50,000 times 0.05. And maybe it would make more sense if we put that here. Right, so that you can see that. Okay. All right. So that's all there is. I think, oh, and July 31st, we issued the stock dividend. I suppose we got to do that one too. And that would be to stock dividends, distributable. Remember we had that up here as a credit, so now we're going to debit it. And then capital stock, oops, common. So this is just for the 2,500. The paid in capital in excess of par value doesn't come into play here. So that's it for this Work Together 11-1. Hopefully you can do the on your own. It's here in the same workbook.